We're taking a look at what's going on over here in Nigeria's markets, where Nigeria's inflation, December inflation numbers have actually come out. Now, in Nigeria's inflation eased to 12% year on year in December from 12.3% in November, of course, following a slowdown in food inflation to 10.2% year on year from 11.8% in the previous month. Now, we also saw core inflation, of course, which excludes farm produce, accelerate in December to 13.6% year on year from 13.1% in November, which of course likely reflects the festive season pricing. Now, joining me on the line to take apart this inflation number is Bismarck Rwane. He is the CEO of Financial Derivatives Company. Great to have you with us on the show, Bismarck. First and foremost, let's get your thoughts on these numbers. I mean, certainly everybody expected inflation numbers to spike in December due to the Christmas period. However, we also did see core inflation go up. What's your take?
No, first and foremost, we called it that inflation was going to go down to 11.94, and every other person said inflation was going to go up, so we got it right to start with. Right. And the reality is that I think the effect of the flood was exaggerated. And usually in December, supply of products actually increase relative to demand, and therefore seasonally we've always seen prices come down in December, except for core inflation, which you spoke about. So really, we think we are in an era in which inflation is going to go down further. That is not only in December, in January, what we are seeing is the prices go down lower. The reality is that what does this mean for the Monetary Policy Committee meeting on Monday and Tuesday? Is historical inflation going down? In the last 5 months, inflation has gone down 4 times and has gone up only once. So the trend is quite clear that inflation is going to go downwards, and then we have to deal with the impact of that on interest rates and right. The various instruments for managing the monetary policy.
I mean, and Mr. Rwane, what do you think the impact will be on interest rates? I mean, the MPC meeting is coming up next week. Do you see them cutting rates?
Yes, I think that this is a major determinant in dealing with the interest rate scenario. The central bank at the last meeting 2 months ago said they didn't want to prematurely move to an accommodative stance, that is, begin to reduce rates and give the impression that all was well. Now that since that time, we've had 2 inflation numbers, one up and one down, but the one down being the most recent. I think the central bank will be more willing to accommodate a reduction in the rates, not significantly, but just directionally, in the sense that I think they may be able to go down by 25 basis points. Mm-hmm. And also, we'll may be able to tinker with the cash reserve ratio and bring that down maybe from 12% to 10%.
Right. Well, how do you see this number affecting the market, this 12% number affecting the market? How do you see investors responding to this, and certainly offshore investors as well?
Once the investors see inflation, there will be anticipation immediately that the central bank will begin to bring down rates. If they're bringing down rates and yields begin to tighten, you'll find that the price of the existing bonds will increase, right? But more important is the fact that we are going to a declining interest rate environment, and the markets will look that way. However, before we jump to premature conclusions, we have to ask ourselves, what are the 5 factors that drive inflation fundamentally? The 5 factors are productivity. Have we seen an increase in productivity in Nigeria, or are we going to see an increase in productivity? The answer is in agric, yes. In power, yes. But in terms of technology and others, no. Are we seeing an increase in money supply? I do not think that is going to happen initially, but there is a major fear that money supply will increase towards the end of the year as the AMCON bonds mature. Mm-hmm. Thirdly, are we going to see fiscal? Fourthly, are we going to see fiscal discipline? Is the government going to be restrained in its spending? You know the battle of the budget is on, and the National Assembly wants $79 a barrel. The Ministry of Finance wants $75 a barrel. That matter is unresolved. And then finally, the cost of alternative power. So if you take all of this, 3 of the factors, and finally wage pressure. There is no wage pressure right now.
Right.
3 of the factors are inflation friendly. 2 of the factors are uncertain. Right, and that is where I think it's difficult to say that interest rates will continue to decline. But our forecast is that interest rates decline, and that by the end of the year, you'll see an NPR of something like 10% from the current rate of 12%.
Right. So your forecast is that we'll see interest rates continuing to decline. But give me a picture of what your outlook is for inflation. A lot of analysts out there are saying we might see it moderating in Q1 and then maybe inching up later. What's your take?
I think that inflation, our projections for inflation for the end of the year is that inflation comes down to 9.5% from the current level of 12%. So we see moderation, and we see sustained moderation because of the productivity gains and the lack of wage pressure and moderate money supply growth.